Okay, so we have some evidence here for a new floor developing for Dogecoin, right? And right now it's looking like it's around the 15-cent mark. For the last 3 days, we have opened or closed around this mark here. So I'll warn you now that this floor, as we stand right now, it's a little weak, but we can possibly strengthen it over the next couple of days. Obviously, we'll have to kind of see how price action does, or where we actually, or if we even actually come close to retesting it again. But this here, this type of price action is ideal. This is what you want. Um, but I know it was a little, I guess, depressing for the community because it sold off a bit, and sometimes the longer wicks on these candles can scare you. But again, that's not where it actually closes. So when it comes down to establishing a floor, typically that it entails having a red candle, because the green candle would mean, even if it's a smaller candle, it'll still mean like it's still ascending, and it's not necessarily a sideways movement. To have true sideways movement and to build out a floor in a specific zone, typically it's going to consist of both green and red candles. So this isn't a bad thing here. I actually think this is probably, out of this whole entire trend, to be honest with you, what we've experienced over the last 72 hours is probably the healthiest part of this entire trend. So as I was talking about the other day, I was saying building out stairs kind of helps build the strength of the movement versus the rocket ship that we're seeing here. So in an ideal situation, what you would want is for the next 24, 48 hours, maybe up to 72, is to get a few more candles in this range, right? And so would be our stepping stone to have the next run, and that run will more than likely take us to around the 30-cent range. I'll chart those out here over the next day, but more than likely they'll put us in a two-part series. We'll kind of go to like the 2022, which is what we talked about before, and it actually did go to 21 before that. Those coins started selling off, and then we'd have a little pushback possibly in the 25 range, depending on how strong FOMO is. And then we'll be somewhere between like 27 and 29, maybe with a little overshoot to 30 before we'll run into something like this, and we'll need to build out another stair, depending on how strong FOMO is, because it's possible we have to do this again at around 25. But based off of this, the last 8 days, 8 consecutive green days, I imagine we may blow through that range, and it'll probably happen somewhere closer to around 30 cents. So obviously that's TBD right now. So with this being said, the 15 range here, what we're looking to do is get this, as long as we're in this zone, we're going to be better. Honestly, we're actually above it. This is what I meant when people were complaining about this candle being red. It's like we're literally off the charts. We've blown through the projections here. Like even RSI and stuff like that is up, and the market is holding steady. And the beautiful thing is with crypto, it's not, it functions similar to stocks, but it's not like actually a function with stocks, because you can actually RSI and stuff like that can remain high for months. And even typically on a typical bull run, after the first 30 to 60 days, you can kind of throw it out the window, because it's going to say technically it's overbought, and this one's still going to be running and running and running throughout the cycle, and RSI is going to be trailing it. And a lot of times people don't like to talk about it, because even if you're using RSI and SMAs and stuff like that, those are lagging indicators. So they are something that's going to kind of chase the asset. And when the assets are moving that fast, you're going to have to move the variables around. But what we're looking for right now is to build out this floor here, and then have that this be our support. So what we're looking for, this kind of, let me see, do a hypothetical situation here. We will have the run. Let me click off of this. We'll have the run. That's not working. Here we go. So let's say we'll have the run from this range up to, let's just say 30 cents, right? 29 cents. Just bear with me and just use your imagination for this. And so what we'll want at that point is something similar to this, the sideways without a floor, and then rinse and repeat. Ideally, it's not, it's almost never that clean, but you get the picture. So, and what we've been experiencing is, and where we kind of get into trouble is based on the last run. This isn't what we got. We got this probably in like the 20s, a little bit in the early 30s, and after that, it was just extreme FOMO, and it was gaps to the moon. So the healthiest thing that we can do this cycle, because it appears based off of the momentum and stuff that we have now, even at these levels, it appears that this is going to be a stronger move than what we've, at least capital wise, than what we've seen in 2021. And what we have to make sure, I guess we don't have to make sure, but what would be a healthier movement, especially if we're talking about sustaining higher prices, is, you know, be careful about those gaps, because once if history repeats itself after this here, let's say, matter of fact, let me retract this real quick and then I'll set it up. When history repeats itself, it'll be something like 30 cent, and then it'll come in. We'll have this gap here, and that'll be the range. And then we'll have a few days of this up, down, up, down, up, down, up, down. And then we'll have another one, maybe something similar, like a few days like that. And then boom, another gap. And when you have weak floors like this, because technically if you go sideways a couple of days, they'll say, oh, okay, well, that's a floor. You know, floors have strength levels too. And this is, you know, when you start talking about filling gaps, you can certainly blow through one of these floors. So you have to, you know, it's not necessarily about some sideways movement, but you also want to make sure there's some strength there. So that way, if there is a sell-off for, you know, whatever reason, like kind of like, you know, Powell throws a curveball this week or something like that in the macros and the market sells off, you want to say, okay, well, it's not threatening to fall from, you know, 55 down to 29. And that's, you know, that's kind of what happened when you have those, like with SNL, we had all those gaps, you know, the support was, at least a strong floor, was so far beneath the current price action. There wasn't much to even sustain that, because at that point you'd have to say, okay, well, new investments would have to kind of come in and literally outbid all the panic and fear that's in the market. And that is a very difficult thing to do. So that is something we want to avoid this time. And I believe that we're going to do that. I think a lot of people have learned, and they're more sophisticated investors now. So when we see things like this, like I saw a lot of comments, people were purchasing around here. So this is great. If you didn't watch the last video, especially where we are now in this range, if you can catch Dogecoin at around 12 cent, that is going to be an ideal range for our current price action, as far as for making an entry into the coin. Because this is going to be, the closer you can get to this current trend line, the better. And obviously, as time goes on, as the days goes on, you'll see that this trend line is actually at an angle. So that price will actually increase over time, you know, if we're doing this in respect to this trend. Now, something happens, and for whatever reason, if we close below it, then of course that invalidates this, and then we'll have to readjust things depending on what the price action is telling us. But as for now, you know, even if it's, you know, you wait until March 23rd, then, you know, now instead of 12 cent, it's 13.98, which is roughly around 14 cent in respect to this trend. So that's not an indicator to, like, you know, rush you to make decisions. But just know that if you're trading within the trend, and if the asset is moving and setting those higher highs, then it's, you know, you can't do the sit and wait approach as well. So you kind of have to be confident and have conviction in your investments, or, you know, just simply wait for a major correction or major pullback. But just understand that that major pullback may not even happen in this range. That may be something like what I told you at like 40 or 50 cent. That may be the major pullback. And even then, it still may not come back to this range. So just kind of keep that in mind when you're trying to time the market. especially if you're long term, because typically you're going to end up shooting yourself in the foot. Shorts, I don't believe right now they're running back into the market. So yeah, so a little green right now. This was red earlier. Again, this candle hasn't closed. This can close down. It can close up. We'll see. Right now, 25.14% on the day. When we did our last video about 12 hours ago, it was red. So we'll see, because right now we'll see there. This will be a great gauge of confidence as far as for where they believe the market's going to go, and if it's going to, if they believe it's going to continue to go up. This right here tells me that they're not that confident, because when they are confident, you'll see things like this, or if they do exit, you'll see a bigger candle come right back in immediately. So we'll see, because they got cooked right here. So we'll see, if they're willing to step back out into the light today. So that'll be certainly a great point. But with this new floor, as far as for Doge, I think that this may, I don't say like slow down some of the like excitement, because it shouldn't. These periods here are very crucial to the health of the move. So when you are looking for your entries, or for people who are waiting on paychecks and stuff like that, you have these windows, maybe it's like 2, 3, 4 days, where it's going to be play within a certain range. Right now it appears to be between 15 and 18, and that's going to be the range for that time, and then we ascend to the next level. So that is what we're shooting for. If you haven't seen it, I know for those of you that watch all my videos, bear with me, but we're getting a lot of new people, so I want to make sure that they are up to speed. If you haven't seen it, this is a perfect example right here with Bitcoin. So you see right here at 39, up, stare, making a sideways movement, up, stare, up, stare, up. So that is what, for the accumulation periods, you want to say, like, so if you're saying, okay, we don't necessarily believe we're going to have a retracement back to 38, especially no time soon, you are looking for periods like this. You start getting a couple days of confirmation. Again, like I said, typically it has some red candles. You say, oh, okay, well, now I can increase my position. When you start going on the run, okay, I'm not increasing my position. I'm not buying green candles. I'm not chasing it. Then here, sideways movement, get a couple days within the same range. Okay, now get a few days within the same range, especially with a red candle. Okay, I'm looking to increase my position. Same thing here. So those typically are the ranges you are looking for, and I think we're in one of those right now with Doge, for those of you who are asking about a buy signal. So with that being said, that's the current price action update. If you found value in this video, make sure you subscribe to the channel and like the video, share it with a friend, and I will see you guys in the next one.